In this video, let's take a look at Schedule C, which feeds into Form 1040. And in talking about business income and expenses, this is something we need to familiarize ourselves with. Again, this is you can download these forms from the irs.gov website. This is I'll post a link here in the comments afterwards so that you can download this. But I'm going to take a quick look at this. For those of you who haven't seen this, this is going to be where somebody that has a sole proprietorship, all right? This is, your single person landscaping business, a one person car shop, etc. Even if you have an LLC, this is where it's going to go as long as it's a single member LLC. All right, if it's not, we'll talk about that in later videos. That gets into partnership taxation, 1065s, etc. But that's not in the scope of this video. So the first thing we see here is profit or loss from business. All right, so this is what we're looking at here. We're concerned with that. And we also see that this is also for tax year 2021, which is where we're currently at in our discussion of the tax law. So the first thing that we're going to do is we're going to say, what is the name of the proprietor? All right, so in this case, we're just going to say proprietor's name is Sydney Jean. All right, social security number is going to be 111111111. How about that? Their name of their business, I'm sorry, the principal business or profession is going to be jewelry cleaning and sales. All right, and then for the business code, there is a search that you can do. So if I were to simply, let's go ahead and all right, so that is going to be, all right, come back here and go ahead and, it didn't add it in there, but you just do a simple Google search and look up the business code that way. If you have any questions on that, let me know. And the business name of this is going to be Sydney Corp, even though it's not a corporation. All right, just for the sake of this. And then they're going to have a employee ID number. Got ready to say 84 number, but it's going to be something to this effect. All right, this is just a made-up number for the purposes of this. So this is going to be 1234 Sydney Jean Way, and they live in, let's say, Roanoke, Arizona. How about that? I don't think there is one. That is the point. And the zip code out there would probably be 80,000. There we go. All right, so we filled out the name of the proprietor, the type of business, and the business name. Next, we want to look at, does the taxpayer use the cash accrual or some other type of method for accounting? All right, for the sake of most of us, myself included, I'm going to use the cash basis. All right, and we'll talk more about accrual basis accounting in later chapters, but for now, let's just talk cash, keep things fairly basic for the time. So the first question it asks is, did you materially participate in the operation of this business? And if no, you see the instructions. So what does that mean to materially participate? It means, were you actively involved in the decisions, the day-to-day, etc.? If not, you probably had passive income, and we would start talking about Schedule E. We'll talk about that in later videos. If you acquired this business during 2021, aka started it in 2021, check here. Sydney Corp's been around for a long time, so they don't need to check that one. And then, did you make any payments that would require you to file a 1099? You see the instructions. All right, so this is going to be if you use subcontractors. Let's say you had somebody come in and do some work around the shop, maybe build you some custom cases to hold the jewelry or whatnot. You would issue them a 1099 at tax time. And if so, if you did do that, you would click here, either yes or no. So we're going to click, we did make some payments, yes. And then the next question is here, it asks you to certify, did you file or will you file the required 1099s? And that is always going to be a yes. And if it's not, contact your accountant and have those 1099 filed, because they are legally required to be sent out. All right, so now the rubber meets the road. What are we looking at here? All right, so for tax year 2021, Sydney had a pretty good year. All right, Sydney made $250,000. All right, so it's not a bad year. A couple returns. We're going to say it had about 5,000 in returns, and we'll get to cost of goods sold here shortly. But that's pretty much it for this top section. So next, you have all of these different expense categories here that some of them have additional details, and we'll dive into those other forms later. But for now, we want to say, maybe Sydney spent 2,500 on advertising, car and truck expenses. This is just going to be a quick, synopsis here. It's a little more complex than this, but we'll get into it later. Let's say that they spent 10,000 on car and trucks, commission and fees, 100. You get the picture here. Let's say they paid some mortgage interest, legal and professional fees. I'm making all of this up. I just want you to see that these are the common categories here that we're going to be looking at. They had to make probably 4,500 in repairs because the building's old, and they paid taxes, licenses, $9,800. You get the point. You can really make this stuff up. And then we get down here, they want you to sum all this up, total expenses, and then going back to cost of goods sold. This is an important thing. We need to pay attention to this, all right? So how do we value our inventory, all right? So in this case, we're valuing the inventory by either cost, the lower of cost of the market, or another method, and you would attach the explanation there. It could be the LIFO, last in, first out, FIFO, first in, first out method. But for this case, we're going to use cost. It's easy. All right, so, and was there a change in determining the quantities, cost, or valuations between opening and closing inventory? In our case, it's not, because we're going to keep things easy, but if yes, you would, and then you would explain what happened. Did you have a fire? Did you have a revaluation? Did the economy collapse? Whatever it may be, did your inventory, pretty much outside of your control, change in amount drastically? All right, if that's the case, click yes there. All right, so for Sydney's business, she had 15,000 in inventory at the beginning of the year. All right, now she did purchase this year 200,000 in inventory. All right, I think that's right. Yep, 200,000. And cost of labor, no labor. It's a sole proprietorship. She doesn't give herself a paycheck because a sole proprietor does not pay themselves payroll. Fun fact. Materials and supplies, I don't know, probably bought about $5,000 in random materials and supplies. And then other cost would be, I don't know, incidental, 1,000. You then add all of these numbers, all right? So you add numbers 35 through 39. So you got 15,000, 200,000 plus 5,000 plus 1,000. So that's going to be 215, 220, 221. All right, so that's going to be 221,000. And then when she counted her inventory at the end of the year, she had 21,000 left. How about that? So that would mean that over the course of the year, Sydney sold 200,000 of inventory. And how we get that is inventory at the beginning of the year plus our purchases plus materials and supplies and any other cost. You add those numbers, and then you subtract out whatever is left over inventory at the end of the year. That number in between is going to be your cost of goods sold. So then that 200,000 there, we take that, and then we go back up to the top. Remember, I said we'd come back to this. Cost of goods sold goes here, 200,000. All right, from line 42 below, need one more zero. So then you have gross receipts or sales of 250. Returns and allowances of 5,000, so that's 245,000 here. All right, cost of goods sold is going to be 200,000, so your gross profit, all right, the gross profit at this point is going to be 45,000. Now that 45,000 is what is used to deduct the remainder of these expenses here. Now, and because I did this haphazardly, I may not have left enough money here, so we may have incurred a loss. But in short, what you would do is take these numbers here, all right, so the 2,500 to 10,000, etc. You would sum all of those up, you'd put them here on line 28, and then subtract it from your gross profit, and then that gives you your tentative profit or loss. And this will take us to the end of this video. In following videos, we'll talk about self-employment taxes and some of the supplemental forms that go along with Schedule C.